What we learn today is that public finance is the government's management of financial resources including revenue, expenditure and debt. It's a core area of study within public economics and political science, focusing on how governments finance their activities and the impacts of these policies on the economy. Key aspects of public finance include public revenue, how the government collects money, primarily through taxation, but also through other sources like fees and fines. Public expenditure, how the government allocates its funds, encompassing various areas like social programs, education, infrastructure, and defense. Public debt, the total amount of money a government owes to its creditors, often resulting from borrowing to finance expenditures. Budgeting, the process of planning and managing government finances, including setting revenue targets, allocating spending, and monitoring performance. Public financial management (PFM), the overall framework for managing public resources, encompassing revenue administration, expenditure control, and debt management. Public finance is crucial for a nation's economic stability and social progress. It plays a vital role in funding essential services, ensuring the availability of healthcare, education, infrastructure, and other public services. Promoting economic development, investing in infrastructure, research, and other areas that can boost productivity. Addressing equality, implementing policies like progressive taxation and social welfare programs to reduce income disparities. Maintaining financial stability, managing public debt, controlling inflation, and responding to economic shocks. The study of public finance involves analyzing the impact of government policies on resource allocation, income distribution, and overall economic welfare. It also considers the challenges of ensuring fiscal sustainability, managing public debt, and promoting transparency and accountability in government spending. Public finance and debt management are the taproots of economic productivity and social progress in countries. It is the bedrock for domestic revenue mobilization, prudential budgeting and public expenditure planning and management, sustainable borrowing to make debt work for growth, deepening and broadening capital and financial markets to create wealth in countries, and strengthening supreme audit and accountability functions to plug leakages through illicit financial flows and corruption. In fact, the health of public finance management in countries define the health of the economy. Public financial management (PFM) is a central element of a functioning administration, underlying all government activities. It encompasses the mechanisms through which public resources are collected, allocated, spent and accounted for. As such, PFM processes comprise the whole budget cycle, public procurement, audit practices and revenue collection. Sound, transparent and accountable public financial management is a key pillar of governance reform and of vital importance to provide public services of good quality to citizens, as well as to create and maintain fair and sustainable economic and social conditions in a country. PFM involves highly complex, technical tasks and processes, including macroeconomic forecasting, budget allocation, accounting and auditing. The complexity of such processes limits public scrutiny and provides many opportunities for corruption. The risk of corruption varies between and within the different stages of the budget process. Although corruption primarily manifests itself in forms that involve illegal money transfers at the budget execution level, other steps of the budget process may create opportunities for corruption at other stages of the PFM process, such as budget formulation, budget approval, accounting and reporting or audit stages. PFM reforms have typically focused on achieving and securing overall economic and fiscal stability, allocative efficiency and operational efficiency. To this end, PFM reforms mostly prioritize technical approaches to improve the performance of the PFM systems, including through the integration, modernization and automation of PFM processes, revenue collection, public expenditure management and procurement systems. While these reforms are not primarily aimed at curbing corruption, there is a broad consensus that they can help prevent and detect misuse of public resources through streamlined processes, increased transparency and stronger oversight. Recent trends in PFM reforms call for moving beyond technical reforms and paying more attention to transparency, accountability and public participation in PFM. Global initiatives, such as the Open Government Partnership, the Global Initiative for Fiscal Transparency, GIFT, and the International Budget Partnership are working for this purpose. Every country has a public accounting system, PAS, a system that manages and provides information on the government's financial transactions, assets, and records. Accounting, bookkeeping, recording, and reporting is necessary for effective decision-making, control, and transparency. Timely, accurate, and adequate information on income and expenditure flows strengthens the capacity of government to decide and control budget totals. It also helps in the management of long-term fiscal sustainability and affordability of policies. A proper public accounting system ensures that the government can meet payments. However, the level of accuracy, timeliness, and transparency varies. Some public accounting systems are very sophisticated, comprehensive, digitalized, and hard to manipulate. Others can be controlled by a few officials at the top of the state apparatus and are rudimentary, cash-based, and based on a money-in, money-out principle. Creative accounting and pure fraud is possible in most systems. However, the simpler the system is, the more manipulation and interference is possible and can be driven by political interests. But even sophisticated systems are not immune to fraud, and skilled fraudsters can siphon off substantial amounts of money. Public sector accounting systems are getting more technically advanced, with composite computerized systems rolled in. The effect of bureaucratic reforms and technical improvements depends on the political will to implement them, as is the case of any part of a country's public financial management system, PFM. Administrative reforms and technical solutions to corruption and leakages is that they require political backing. The World Bank summed up their experiences of 25 years of supporting financial management information systems in one lesson. Accounting standards. Accounting standards seek to make financial information transparent, mitigating the risk that those with political or bureaucratic power act in ways that are unethical, illegal, self-serving, and inappropriate. One widely applied international standard for public accounting is the so-called Integrated Financial Management Systems, IFMIS. In Kenya, for instance, all departments and ministries under the national and county governments are required by law to make all transactions involving public funds through this system. IFMIS establishes 4 basic quality criteria in public accounting: timeliness and regularity of accounts reconciliation and reporting, availability of information on resources received by service delivery units, quality of in-year budget reports, and quality and timeliness of annual financial statements.